Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's October 5th. This will be our chart lesson for the day. And here's a quick look at our daily chart again. I've been showing this so much, I just thought I'd keep showing it. People tends to help people. People tend to like looking at it. You can see I feel pretty confident in this blue channel that's working down now. Let's just do this to make it real easy to see. We'll color it. You can clearly see that, but you can see, notice how we closed right at the midline. We actually got through there, and by the time of the day closed, we closed behind that. This market was really strong, so it was able to push on through there, but it couldn't close above there, and that's telling. You can clearly see we're just stacking sideways here again, and I believe that's just because we're caught between the lower trend channel line and the midline. If we get through there, we're probably going back to the trend line, and then we'll see what happens when we get to there. But my belief is this is our target, so we could just keep kind of easing down until we meet that. We actually made a higher low each day here, but we made a lower high at the same time. So these are just inside bars. So we're just chopping wood here, so to speak. Prices are not really going anywhere. They're just trending up and down. You know, there's a down bar, an up bar, down bar, an up bar. Maybe we see another down bar tomorrow because we're still selling off. Going into the close here at 4 o'clock. And if you missed that yesterday, let me flip over to the other chart. And just in case you missed it yesterday, go take a moment to listen to yesterday's chart lesson if you didn't get to see it. Because if you noticed, I've moved the cutoff time to back from 3 o'clock to 2:30. Just basically because I believe that by the time we get to 3 o'clock, if you're entering a trade there, you're too late. So I don't believe that you should enter any new trades after 2:30. Now you could still manage a trade. You might even manage it all the way up into the close if you wanted to. Just make sure you're safely in the money, that you got your safety stop in place and so forth. But don't enter any new trades uh, after 2:30 because based on conversation I had with another trader, I believe he's right that it gets too volatile there and there's too big a chance for something maybe happening and so forth. So uh, stick to the 2:30 close. Again, if you're already in a trade and prices are moving heavily in your favor, don't get out just because it's 2:30, but just don't take any new trades after 2:30. That's kind of the intent there. So, but let's look at today's chart. You can clearly see a huge, strong trend to the upside here. Um, we had a break up here late morning, and we traded on up into about 2 o'clock, a weak move to a new high. And I had this conversation with actually in the forum today. Once once you get a close outside this trend line, a convincing close, and a move to a new high, even though prices continue to go higher, you got to be very careful about taking any more longs because you can see it's not long after that till this thing rolls over and it's rocketing down the other direction. So once you get a close outside your trend line and a move, and especially after you get two legs up, at least two legs to a new high, doesn't mean that you couldn't get some setups or a trap or something that would still give you another long opportunity. But just be real careful taking normal trades because you can get burned. Because once you've had this close and two legs to a new high, then you've met the criteria for that trend coming to an end, and it could turn over at any time and do what it's done here. And sometimes it rockets down like crazy. So you got to be real careful. Now, obviously, if prices are still trending up here and you get some short trap or something that gives you a good setup, don't be afraid to go long, especially on a strong trend day. But on an average day or a range day or a weak trend day or even on a trend day like today, once you get that two legs to a new high, just make sure you got a really, really good setup. And the reason I thought about that is because you see it here, and we just had that conversation about a trade in the forum. So it might save you a headache. But anyway, let's talk about the trades. 7 o'clock came, I believe, just as we're topping out here and pulling back. I really thought maybe we'd get a setup here on a real low risk bar. I think that bar is 7 ticks and this one's maybe 4 or 5. Yeah, but it's an inside bar and it wasn't even bullish by that time. And this is almost a doji, so I don't think you can go long there, especially when it looks at this point like you have an overshoot. Um, However, I want to say this. A lot of times you will see an overshoot or even a break of the trend line during the overnight hours, and it doesn't really change anything. Yeah, sure, it led to a reversal back to the trend line here, but you don't get any break of the trend line here. Um, and at this point, I wasn't even sure that was an overshoot. It sure looks like it, but I wasn't sure. But eventually, we turned down a little short of that, and eventually we reached that point and turned down again. And so, in the end, that's correct. But you don't necessarily, I mean, at this point, it really looks correct because look how many times we've turned down up there. So, but back to my original point was sometimes you'll get a overshoot or even a break of the trend line if it's in the overnight hours prior to 8:30 a.m. Central Standard Time where my chart turns white. Sometimes you can ignore it. So if the trend line continues to hold, just play the trend line. Don't worry about it. Because what happens is the volume's so thin, you'll see some extended moves that you probably wouldn't have happened otherwise. So don't concern yourself as much. Definitely pay attention to them. Don't just ignore them. But after you see them, if prices don't do what you expect and they continue to respect the trend or the channel or the trend line or the range or whatever, just continue to trade it. So I hope that's clear. But anyway, 7 o'clock comes just as we're turning back down here. And we just get in this range, and I don't see any setups. There's one long here you might have taken or wanted to take, but when it didn't break higher right here, actually this is your signal bar, so you couldn't even take that. Well, I was thinking there was one here that I didn't mark. Maybe I just misread it. Maybe I thought that was it. But assuming this was the real clear, let's assume that was bullish. It does give you do have 3 tests there. So you may take that trade, but you can see here that signal bar doesn't qualify. So either I'm remembering the wrong spot or I just misread it. I was thinking that this had an equal low or lower low or something. But anyway, we're just going sideways here. We're in a range. It's obvious. And you can see how many times we turned down right there. But you don't want to be taking a short yet. There's no reason to go short there. Then we finally come up here and get this little failed breakout, and we make a perfect double top basically, and you get that nice bearish bar. That's the place to go short. You're just looking to get a scalp out of this, but this turns out to be a fairly nice trade. It comes all the way back, and then you get a first entry short, and then you get a second entry short. So if prices break higher right there, this actually broke lower and turned up. So I like trading that on engulfing bar, but you might wait for this one to close and then enter if it breaks higher. It wasn't good for much more in a scalp, but it easily got a scalp, but that was about it. And then it comes back, gives you 2 legs back, but you don't have a good enough signal bar here to enter long, or that would have been a good place. But if you're just patient, a few minutes later you get a first entry short, a second entry short, and a great place to go long. There's enough room to get out right there. I even considered this one because it's a higher low, and it does close outside of that resistance when we've already pushed through it a couple of more times here. But the problem is it's basically right into a double top. So I think it's just you don't have much room there, and you can see it does pull back. But when it pulls back after making that slightly, I think it makes a slightly higher high. Let me just double check that before I tell you that. Yeah, you can see it makes a slightly higher high there by a tick or so. Pulls back and tests this. So it gives you this inside bar. So it almost, it almost makes you want to say, hey, you better wait. And if you did, you can go long right here. Because it's right by that time you've got that trend line confirmed a few times, and it's right off that trend line. But I still like that one just because it's the trap. So if it does break higher, it's probably going to take off. And you can see when it does break higher, it takes off. It starts running not only the stops of the people that were getting short here this time, But everybody that's gotten short all the way across here have been putting their safety stops just above that, and so it hits them and starts running them. And then when it runs out of steam, it pulls back again. We run up and you get a first entry short, a second entry short, and again this breaks lower first and turns and goes out the other side. You might enter on the engulfing bar, but usually I'm not crazy about those. And here I wouldn't even like entering on this bar since it's an engulfing bar one tick above it. It's not a perfect bar, but it is again another trap. Notice your low, first entry, second entry, and we're not to the highs yet. We're also right at the midline of the big blue channel. You can see that, and we're closing above it there. If they can break it higher, they're going to run the stops here. And of course they do. It takes it a minute, but once it takes off, it just keeps going. And it's obvious this is a fairly strong trend. And at the very least, I would have been, I didn't mention this earlier, but I would have measured this first leg here and look for at least a measured leg up. And you see that's right where we went to before we corrected again. So I like to go in long there. And then we come up here and we're just working sideways. You test that support once, twice, 3 times. Nice signal bar. Just go long there. There's a higher low here, but I don't see a reason. I mean, it is a little pullback, but I'd want to see it test that again because it could have come on back to the trend line. It doesn't. It takes off. But then we're just kind of, let me zoom in a little more here. And you can see there's just not much happening here. We're too much sideways. I don't think you want to enter that. It breaks out. Probably goes a measured move. And you can see that's basically a perfect measured move that comes back and it tests. It actually pushes a little more to a measured move here. But it comes right back to the midline. It bounces off of it. You get a first entry short. It pushes up through the EMA. You get a second entry short that fails. If it breaks higher there, it's probably going to take off again, and look at it go. It quickly got a break of this channel though and moved to a new high. So I don't see anything up through here that's probably worth trying to enter on. So we reach the highs and then we turn down. And again, somebody asked about some shorts in here. On a day like this, don't take any shorts. Just wait on the good long entries and take them. And you can see we had this channel working down. We get a break, move to a new low, and then we get a reversal failure right here. Look at the new low. First entry, you push through the EMA, pull back, second entry short. It fails. When it breaks one tick above that bar, go long. And once again, they caught all the shorts and they run their stops. And boom, it runs right up. And then it corrects again. We didn't get back to the trend line. But the reason they were able to gain that momentum is because they ran everybody's stops right there. They knew what was going on here. And so now they're piling up again. I marked this one. This is right off the key entry point, and it's a pullback first entry, second entry. I made it green just simply because there's no close outside that trend line. And there's a possibility you could get a measured move here, which means prices have a little more room to go. We didn't quite reach that. We came up just a little short, but you can see we did get the break, and that's why you got to be real careful here. But it was a second entry. It was at the key entry point. I wouldn't take that higher low right into the EMA because that's what happens to you there. It breaks higher, hits that EMA, and turns down. Another trader asked me about this trade. If you look at it, it is a first entry and a second entry, but it moved to a whole new low. So I don't think I would want to treat that necessarily as a failure, especially being below the EMA. But there is a new swing high there. It's higher than that one. So you could look at it as a second entry long with a decent signal bar. But if you entered there, you would have got stopped out anyway. So I don't think you want to enter there. I think you want to wait on a higher low, which comes here and is no good, but then you get a failure here. It's technically the failure is when it breaks higher above this bar, and it actually ticked lower again, so I really like going long there. But you probably want to put your stop down here until this bar closes and then move it up. So technically this was your signal bar on this failure, so that's why you see the arrow there. But you enter where it breaks higher, and that's one tick above this bar. And that's the only time you'd probably want to enter on a inside bar is on a trap. And you actually try to go lower one more time and turn up. So again, until this bar closes though, because it's an outside bar, your stop has to be here, then move it over one tick below that bar. It's good for a scalp. Then we come back, we make another low, and this is the first entry, second entry. But this just looks too congested. I don't think it's wise to enter anywhere in there. We're really, even though you're still trending higher, we're not quite getting back up to this trend channel line. Maybe it's you might say, hey, it's a little lower. But then later on, it doesn't fit up here. Well, I guess it does still fit there. You could look at that as an overshoot. So maybe that is where it is. But you don't want to go long right there into that. And you actually get two legs back right here, and that's right off the key entry point. But again, it's an outside bar. It's an engulfing bar, and there's a lot of stem up there, so I didn't like that one either. And then finally you get a second entry long here, but again, it's an inside bar, not a very good bar, so no entry there. If you'd had a good signal bar here, I'd say take that trade, and you see it would have worked. Then we come back first entry, second entry, and I didn't mark this one either. Again, there's a little too much stem there. It looks a little congested. There is enough room up here to these highs, but you've already had a break and a new high in place. You see that? So anything new after that better be a really good setup, because you see it's only a few minutes later till it turns over. And that's what I was talking about at the beginning of the video. Once you get that break, and technically you've already had a break of the blue one and a new high right here already. And then you get a break and another new high. So you could argue for that one to be gray. I'm sorry, to be green. But I just don't think I would take it. It's just not worth it. It looks like you might get a failed second entry short, but it never triggers. And then when now you're below the EMA, just sit tight. I don't see a short yet that I like. And unfortunately, that takes you into 230, so you never really get another setup. If this would have been a decent trade here on a failed breakout, and a lower high even here would have been another nice trade. And see, that's going right into 3 o'clock, which today would have looked pretty good. But here we are right at that last minute of trading going into 3 o'clock, and you can see all those bars that formed within a minute. And that's what you want to be careful of, not to get burned on something like that. But once again, I mean, the trend is down and the price action is still correct. There's another trend here. So you can see that the price action is still valid down through there. So regardless, but you just got to be careful because it won't always be so clean. So anyway, that's what I saw today. Mostly an uptrend all day till right at before you're coming into the 2 o'clock hour. And unfortunately, it just didn't give us really anything else to deal with there going into 230. I don't see anything I like there. You can see there was a first entry, second entry. It looks like it was going to fail. And there might be enough ticks in there that you could have got out of that, but I wouldn't risk it. Notice that you got one bar and then you get an inside bar and the trend is up. So yeah, there's only 3 ticks in there, so no way you're getting out of that trade. And then you get stopped out, and then it goes right where you thought it would go. So really, in order to start trading short, you got to wait till you get something confirmed going this way, or a better trap than that. That's just congestion right there. And you hear me say it all the time. If you just stay out of congestion, you'll save yourself a lot of losses, and you can clearly see that congestion there. And right there, and if you just stay out of those, that will save you a lot of losses. And one day when you're a really good chart reader and you can understand what's going on, maybe you trade those. But I mean, there's no way to trade that anyway, either one of those. There's no setup there at all on either one of those, so there's no way to trade it. But this one, you could have tried to argue there was a failed second entry long there. But if you look, you got a bar with no body. It's inside this, all of this to the right is inside this big red bar. That's what congestion, you're just going sideways. And at least one of them has no body. That one's inside it too, and it has no body or a tiny body. So that's congestion. And if you just avoid those, anytime you see 3 or more bars and at least one of them has no body or a tiny body, that's congestion. Now there's no rule that says you can't enter in congestion but if you're not a very skilled chart reader, you're better served to just avoid trades in congestion, unless you can trade it like a range, and then you use the range rules. And if you got enough room to do that, then by all means, and there's a good setup, take it. But don't look for second entries. Don't look for failures hardly. Just be real careful. And it's a fine line because sometimes some very good trades set up in it. But most people that are learning and new to chart reading would be better off to follow that rule and not trade that congestion rule and say, hey, I'm not taking a trade in that. And once you become more skilled and you start to understand what's going on, then maybe you take more of those. But until then, just don't take them and you'll improve your trading. I guarantee it. I tell people that every day. And the next day they'll send me the same chart with the same congestion and say, well, what happened to this trade? And same thing I told you yesterday. If you enter in congestion, you'll get whipsawed. It's just a fact of life, unfortunately, because basically all congestion is a micro range, and the prices will act the very same. Notice what happens. They fail out the bottom and they turn up, then they fail out the top and then turn down, and eventually they go lower. They don't hold as long, but they still tend to trade exactly the same. Here's this one. It breaks out the top, and what does it do? It fails and goes lower. So they usually will trap you on the opposite side. So if you trade down into this, look to try to trade the failures on the outside, on the high side, to get short, not the low side, because we're trending down now. If we're trending up and you're in congestion, then maybe you do just the opposite. Here we've been trending, actually we trended down into that, but the overall trend is up. So when it fails out the bottom, you look to get long. So you just trade congestion like a range, although you may not get as many setups as you would on a good range. So anyway, I think that's going to do it for today. I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.